It's no secret that if you're a homeowner, sometime last year you got a letter in the mail, and that letter was from your lender, and it probably said that your mortgage rate is going up. And then you probably blew a gasket, you probably threw some stuff at the wall, possibly even put some holes in the wall because you were just so darn frustrated with the way things are going right now in the country. Well, I have a few video clips for you right now that I want you to check out. And these people more than likely share the same feelings as you do. Roll the clips.
I just opened my property tax bill and honestly, I just felt sick about it. So my taxes went up 25%, which added about $400 a month to escrow. A week later, my lender sent a letter saying your mortgage payment is increasing. Now my budget was already tight and now I'm staring at this number thinking like, how am I supposed to afford this? So I called the county assessor and they said home values skyrocketed and there's basically nothing that they can do. So then I called my mortgage company and they said taxes are out of their control. So yeah, I just felt completely stuck, basically watching housing costs climb with no options. And then my accountant asked a really simple question. He said, have you looked at refinancing to offset the increase? And I assumed rates hadn't changed enough to really matter, but I was actually wrong. I found a rate 0.875% lower, and suddenly the math is starting to look different. I'd ignored every refinance mailer thinking that they were scams, but then I Googled, can refinancing offset property tax increases? And I kept seeing people mention Fincast, which is this platform where you upload your loan estimate. They anonymize it, and then lenders are able to respond with improved offers based on your exact loan. I didn't even have to apply 10 times. I just uploaded one time and then reviewed real options. So even with the higher taxes, my new payment is $250 less than before. I'm not saying refinancing fixes everything, but it did stop me from having to dip into my savings. So if your property taxes jumped, at least see what options exist on Fincast. It took me like 5 minutes and it literally just changed everything.
My mortgage payment is $3,843.65. I've been paying it since January 2023, which was 32 months ago. I usually round up to $4,000 so that it's an even number and I'm paying a little bit extra towards principal. The 32 months at $4,000 would mean I paid in approximately $128,000. And yet somehow my overall loan amount has only decreased by $23,000. It was originally $552, now it's $529 if I wanted to pay it off today. So interesting, there's this calculator that says if you pay an extra amount per month, how much you're going to save in interest. If I pay this extra $156 each month to round up, I'm saving $69,000 over the course of the loan. If I was to pay a lump sum payment of $28K, I don't know when I would ever have that money, but I would save $109,000 in interest. This is the reason to pay cash for stuff, because you take out a loan for a $500,000 house at 6% interest. You're paying like hundreds of thousands of dollars more over the course of 30 years. I know we learned about this in school, but it's still so weird to see that in real life. Like you've been paying per month, every month, faithfully for years, and your overall loan amount is still almost as much as it was when you first got it.
You know, it's so funny. There's so many people that said that they don't necessarily care about school. They don't care about math. It's not important. Your multiplication, division, calculus, statistics, all the way into real world applications and the things that we supposed to be paying attention to. Instead, what we do is we promote the same things that the banks have inserted into our heads to everybody else. And we say, hey, we're supposed to get this mortgage that's paying whatever the percentage is. Even if you go back to 2019, 20, 21, 22 interest rates before they start jacking it up so that they can try to combat inflation, because inflation was at 9, 10, 11% under the Biden administration, you're still going to be paying more than double of whatever that house is that you signed up to purchase it, if you don't pay it cash. Now, of course, there's going to be a bunch of people that say, oh my God, everybody don't have it to pay cash. A lot of people don't even put 20% down. They don't even save that. They're not practicing group economics. They fell into the trap. They house poor. But more importantly, all the interest is front loaded, meaning that for the first 10, 15 years of the loan, you're depending on the appreciation of the property because you're paying so much in interest that you're hoping to get equity in. And that's the way that people be able to justify whatever their net worth is, but they don't have enough money to survive because they house poor and they took on this loan for 30 years, hoping that they don't get laid off.
Okay, so quick story time of how my mortgage increased by 120% and how easy it is for Black folks to lose their homes in America. Now, with that being said, I'm going to be completely transparent. I'm going to give y'all all the numbers. I'm just going to let you know because ain't no point in hiding. I don't gatekeep, none of that. Okay, so the beginning of this month, I wake up and I have a notification from my bank saying that my account went under $100. This is interesting because the night before I knew the mortgage was coming out, so I transferred a good hefty amount over what the mortgage was going to be, and I'm like, drop below $100, that's crazy. So I get online and I see that my bank has taken a double payment with like a little bit more. So my mortgage is usually $100, baby, I wish, $1,100. And when I went to go check, they had taken out $2,400. So my first thought is, this is interesting. Like maybe what they did was a double payment. Like maybe something didn't come out last month, and so like maybe that's what it was. Like maybe this is double payment and like a late fee. But that wouldn't make sense to me because it's on auto pay. So if something happened and the funds were there, that wasn't on me. So anyway, I'm like, okay, whatever. Let me just check. So I scroll back up to see if the payment was taken out for March. Sure enough, it was taken out for March, a payment of $1,100. So I'm like, why did I get a payment of $2,400 taken out? So I call my mortgage company and I'm like, hey, what's good? I just want to make sure, like, I'm just trying to figure out what's going on. Like, why did y'all take out a payment of $2,400? And the lady's like, oh, that's your new payment. What do you mean that's my new payment? She's like, well, that's your new payment because you don't have enough in escrow. And your taxes went up by $6,000. My taxes went up by $6,000. Now here's the part that gets crazy. So I'm like, okay, let me check all this out. So three things happened that caused my mortgage to increase. One, she told me that we don't have any money in my escrow. I'm going to talk about that in a second. We don't have any money in our escrow. Two, my homeowner's insurance went up from $2,000 to $4,000. Called them, they were like, well, we don't know what's going on, like the mortgage rates are just the highest they've ever been in Texas right now. We ain't got nothing for you, basically. That's it. Like, what you gonna do? Started shopping around, all of that. The third thing, we'll talk about that again. The third thing was that my property taxes went up. So I go onto the county website to see like what the heck is going on, because this doesn't make sense to me. So when I calculate everything, my insurance had only gone up $711. I remember the number because 711. So I called back. I'm like, ma'am, now this is where everything pisses me off, and there's literally nothing we can do about it. There's nothing that we can do about it. We can call to try to get like cheaper homeowners insurance, but for the most part, it doesn't even matter. Now, so whenever I call this lady back, I'm like, or the company back, I'm like, I don't understand what happened, because every June or July, somewhere around there, they do an escrow analysis and they see, do you have enough money in escrow? For those of you that are new to homeownership, don't own a home, don't know what it is, whatever. Escrow is an amount that you pay every single month. So at the end of the year, they pay things like your homeowner's insurance and your taxes, right? So that way it doesn't come out of pocket at any time for you. You've already been paying all year, so they just write your taxes a check and they write your homeowners a check. Okay, you pay that within your mortgage. Now, and every July they do like an escrow analysis where they say, do you have more than enough? Do you have too little? Do you have to make something up? What's going on? Do you have a deficit or do you have excess? So they hit us up last month and they were like, yeah, you're good. Like you actually got too much. So we're going to send you a check. They sent us a check. They wrote us off a check for $2,900. Okay, cool, bet. Now, for those of you who are like, oh, you shouldn't have spent the $2,900. That way your escrow, baby, we can pay the $2,900 right now. What we cannot pay is an additional $1,300 a month. $1,300 a month is crazy. And there's nothing we can do about it. Like, we can't go back and say, yo, y'all told us we were good. They don't give a damn. They do not care, baby. They don't care. So they literally told us there's nothing, you just gonna have to pay this unless you have like all the thousands of dollars saved up right now to give to us in a large check. I think it was like 10,000, something like that. Then baby, you're just gonna have to pay this extra $1,300 every single month, and then we'll do another analysis. Anyway, I'm gonna have to do a part 2 because this is too long, but I will explain what basically we're waiting for in the next thing. If you have any questions, let me know. I know I didn't want to make this too long, but yeah, this is really what we're dealing with right now, and this is how easy it is, especially for people who are one generation removed from Jim Crow. My parents grew up in the Jim Crow South. Who was going to teach them about financial literacy? Who was going to give them that information to then pass down to us? Like, my parents are the first homeowners. Anyway, I digress. We'll talk about that, but I'll do a part 2.
Listen, I know as millennials, we don't be checking our paper mail, or sometimes you miss your emails, but listen to me right now. Make sure you check your emails, because when I went to go pay my mortgage the other day, it had went up $175, and I was not expecting it because I did not see the escrow analysis that was shared with me back in November, letting me know that I had a shortage in my escrow account. So I go up there to pay my mortgage, boom, 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 and I open up my dashboard, and it was not the amount that I thought it was going to be. So I've said this before, because as a realtor and as a homeowner, that mortgage payment that you get when you close on that home, it can change, baby. It can change, because for one, that insurance is going to increase. My insurance has went up over the course of the past 5-6 years, and property taxes also have went up because the value of my home has went up. But I was not expecting a $175 increase. Like, it maybe went up a little 30-40, but $175, baby, I was on the phone so quick shopping around homeowners insurance, State Farm, Geico, Allstate, whoever has the lowest policy limit or premium, that's what we're going to do, because that's crazy. Also, if you have, if I would have saw this back in November, I would have just paid the shortage amount, because now what happened is that shortage amount, they have divided that over the course of the next year, so that I'm paying towards that shortage amount. So it's like that, on top of the fact they're increasing the escrow to account for the increases in taxes and insurance that they're anticipating for the next year. So take it from me, as a homeowner and as a realtor, check your mail, check your email, so that you're not caught by surprise like I was.
Well, I can't afford my house anymore. Not because I lost a job. I actually got a raise. My mortgage just went up by a lot. So they say, buy what you can afford, live within your means. So I did. A couple years ago, me and a woman I was engaged to, we bought a house together. It was our first time in our 40s. So we bought the house in a small town. I drive 40 miles or 45 miles each way to go to work in a bigger town where I can make the most amount of money. And I live in a small town, so I can afford the house. It's a nice house. I love my house. It's beautiful. Over 2,000 square feet. It's great. When I first purchased this house, it was $169,000. And with all of the insurance and stuff added in, my monthly payment was $1,450 a month. And that was good. And with me and her both working, combined income of like maybe $130K, we could do it. And then we split up. She moved out. Bad decision. I'm an idiot. I don't know. That's a whole nother story. But then my mortgage goes up, and they say, oh, the cost of lumber, the cost of materials have gone up. So in case anything happens to your house, we'd have to rebuild it. So the insurance has gone up. And then the value of the property went up. So my payment went from $1,450 to $1,740. And I was upset about this because my car insurance went up, like doubled. And why? Because I drive 45 miles each way to get to work. And they said, it's because you drive it so much. I was like, but you have my home insurance. Like, I bought this car specifically for the good gas mileage. And you knew that from the start, that I said, I'm going to be driving 100 miles a day. That's why I'm buying this car. And so before I bought the car, I quoted the insurance price on it. So a year goes by, my mortgage goes up, my car insurance goes up. So I have to tighten my belt. I got to do supplemental income. I'm a musician, so I just play more music, do more gigs, and pay it. So from 1450 to 1740, I'm making it happen. I get a call yesterday. They're like, "Hey, you need to pay," and I'm like, "All right, I get it. I fell behind. December kicked my ass with Christmas, and so I didn't make a full payment." I was like, "All right, well, let me get caught up. Let me check my account." And then I asked, like, "Okay, what's the balance?" And they told me a balance, and I was like, "Excuse me, there's what?" And so they told me that my mortgage is now $2,500 a month. 2 years ago, I moved into this house. This town is about 12,000 people. It's a small town. Now, granted, it's a nice house, but it's no fucking mansion. It's not 2-story. I don't have a garage. I don't even have a carport. My backyard is barely fenced in. 3-bedroom, 2-bath. So it went from $1,450 to now $2,500. Because apparently my house is now valued at $310,000 when I purchased it for $169,000. What the fuck? What's going on? Why? I was doing the right things. I make sure I get a job where I can make the most amount of money for what I can do. Look, I work for a good company. I do well. Like, for a high school dropout, I bought it. I bought a new car, but it's not. It's a fucking Nissan. It's not like it's. I didn't go crazy with a Mercedes or something. So I don't know. Who's at fault here? What did I do wrong? I've been working the same career for 10 years. I make decent money. I have a roommate. I have a fucking roommate who pays me like $600 a month just to rent a room from me. I mean, I guess I can try to make the $2,500 a month payment, but then what's going to be next year? Is it going to be $3,500 next year? What am I going to do?
My mortgage payment went up nearly $1,000 because my property taxes more than tripled from last year to this year. So let's talk about it. For starters, hi, if you're new here, my name is Kaylee. I like to talk about personal finance based on my experiences, good and bad, in hopes that you learn from some of my mistakes and you don't gotta learn the hard way like I did. I bought a house last year, May of 2024, in South Florida. I purchased it with FHA at a 6.625 interest rate at a 30-year fixed. Now, my mortgage payment alone, just with principal and interest, was $2,277.05. It's important to note that that's not what I'm going to pay the lender every month, because you have to add on top of that your property taxes, insurance, and that's held in escrow. Escrow is a separate account managed by your mortgage lender, which holds the funds for when it's time for you to pay your property taxes and home insurance. Some loans require that you have escrow, and in this case, because I have FHA, it's mandatory to have escrow. I have to add up my insurance, my property taxes, as well as mortgage insurance. My home insurance last year was $5,774. My property taxes were $2,082, and my mortgage insurance was $1,738. You add all that up, you get $9,594. You then take that number and divide it by 12 for the 12 months in the year, which made my escrow payment $799. Now you take that $799 and add it on top of the $2,277, bringing my grand total monthly mortgage payment last year to $3,076. As stated in the beginning of the video, my property taxes for 2025 tripled, which now makes my mortgage payment $4,002. Before I dive in on the numbers for 2025, I want to highlight a huge mistake that I did in hopes that you guys don't do it. When I got a refund check from escrow, I automatically assumed that the taxes would stay relatively the same, maybe even like a grand over. So when I got that refund, I did not put it back to escrow. That's where I messed up. So from when the estimate came out at my taxes for 2025 being now 8,219, I was shook. Now, I did get a notice mid-May saying that, hey, your mortgage is about to go to $4,002 if you do nothing. Now, if you do make a large lump sum payment of, I think, about like high six, low sevens, then your mortgage payment would be $3,417. Let's do now the new math for 2025 to bring up why it's now $4,002. My home insurance this year was $3,730.91. I highly encourage y'all to shop around to get a better quote. My mortgage insurance stayed the same at $1,738, but my property taxes went from $2,072 to $8,219, giving you a grand total of $13,687. Now remember how we did the math before. We take that number and divide it by 12. So that gives us a $1,140 escrow payment on top of the monthly mortgage, bringing us to $3,417. But remember, I didn't put my refund check back into escrow, so now I had a shortage. And because I didn't anticipate this huge jump, I was short. Lender added another fee of the shortage, causing another $585 to go on top of that, bringing now my new mortgage payment of $4,002. Now, I also seen this a lot in the comments. Yes, I have a FHA 30-year fixed rate. While my monthly mortgage payment will always be $2,277, the payment that I have to pay to the lender may fluctuate depending on property taxes and homeowners insurance, because remember that gets added on top of your monthly payment. Oh, it was probably a new build. No, this bad boy was built in 1959. It's a 4-bedroom, 3-bedroom house in South Florida. Another question was, did I have any type of exemptions? Yes, I did have homestead exemption, which knocked off about $25,000. Now the big question, how is this even legal? How is it able to jump so high? When I purchased a property, it got reassessed to its market value. The last owner had it in 2008, and as y'all know, prices were very different back then. I'm taxed on its current market value, which is hundreds and thousands of dollars over as it was before. Some key takeaways. One, if you get a refund, whether from your insurance, escrow, please put it back to escrow. Don't make the same mistake I did, and that eventually caused me to go into a shortage. Plan ahead and just know the year after you purchase, your property taxes are going to be much different. I pray not this different, but it's going to be different than you initially purchased it with. I'm also getting a lot of great suggestions and advice in the comments of potentially protesting my taxes. I never done it before. I've only owned one property prior to this, and please share how y'all did it, your experiences. I love to learn more about that. And, who knows, maybe I'll try it. If y'all are still watching and you're probably asking yourself, why are you sharing this? Because I want y'all to learn from my mistake. It's so disheartening to see that a lot of you guys are in similar situations with your property taxes tripled, insurances tripled. It makes it so much harder to be a homeowner. How am I going to get out of this situation or fix it? I'm going to eventually have to save up to make a large payment into escrow. And then once that payment is made, I'm going to ask for an off-cycle escrow analysis to hopefully have my monthly mortgage payment go back down. I was initially going to talk about this after everything was said and done and the dust was cleared, but I'm like, why not document it in real time? This is hard. I just want you guys to know that you're not alone and that there's going to be ways and avenues of getting through this. God has me, I am faithful, and I will get out of it. I'm just going to document the journey and just have y'all along for the ride. I appreciate y'all watching this, and if y'all have any questions, feel free to drop them in the comments.
So we're halfway into the first month of the new year. And for many homeowners, they're facing a harsh reality. And that is they have escrow shortages. So they're receiving escrow shortage letters from their mortgage servicers, and most don't understand why. So this video is to explain what an escrow shortage is and also provide you tips and ways to reduce or mitigate this from happening to you. An escrow shortage occurs when your homeowner's insurance bill and your property tax bill exceeds the amount that has been held in your escrow account by the mortgage servicer. The mortgage servicer is going to pay that bill, whether it's over or not. But what's going to happen is you're going to owe the mortgage servicer for that amount that they paid in excess. On top of that, they still need to collect the new year's taxes and insurance. This occurs typically because your homeowner's premium for your insurance and or your property tax bill from the county or state has increased on your property. So that's going to create a shortage. So the money that they had planned and budgeted to pay these bills they're short, but they're still going to pay it for you. So you don't have to worry about that. But when the time comes to pay it, you're going to have a shortage, and then that bill is going to exceed for the next year. So this creates a shortage for the last year, and on top of that, they have to make sure they cover the excess that is anticipated for the next year. So that can create a huge payment shock, guys. So stick around for part 2, and I'll provide you 5 ways to avoid or mitigate this from happening to you.
My mortgage is going up by over $500 a month, so let's talk about it. I live in a starter house. If you saw my house, we would all agree that I live in a starter house, and my mortgage is already $4,300 a month. However, I got a letter in the mail saying that my mortgage is actually increasing, and it's now going to be $4,800 a month. It's going from $4,300 a month to $4,800 a month, and I've owned this house for 18 months. I bought it in the summer of 2024, so do the math. It's not even been 2 years at this point, and that doesn't factor in any of the improvements that I've made on this house. I've already poured over $75,000 into this house. I'm constantly putting money into updates because it's outdated. It needs updates, it needs repairs, just all of the things that come with being a homeowner. And a couple years ago, I made a video talking about why I never wanted to own a house, and I talked about things like this. And my feelings are the same. I am very grateful and very fortunate that I was able to buy a house in the area that I did buy a house in. It is a great area. It's a great school district. But genuinely, the fact that I'm 28 years old and have a mortgage that is essentially $5,000 a month for a starter house that I still have to update and take care of and repair just feels absolutely criminal. I don't think anyone really understands what has happened to.
Okay, so let's hold on for a second before we get into her update. And let's mine this out for a second. First of all, what the hell is a starter home? I know what it means, so I don't want you to go through and try to explain it to me. I know what you're implying, but I don't agree with it. A home is a home. We used to be in a space to where our grandfather and grandmother and great grandfather and grandmother, and sometimes even our mother and father, depending on how old you are, they bought the home, they raised their children in it, they lived in it, and then hopefully they pass it on to their children, and their children didn't sell the home. So I don't know where we get in this starter home. You don't always have to upgrade a home. Secondly, we need the context. Well, not even secondly. Secondly, we need to evaluate why you decided to get into a home with almost a $5,000 mortgage, even when you was at $4,300 a month, which of course I'm assuming that includes escrow for property taxes and insurance and all of that stuff. And then we ain't even talking about the maintenance and improvements. Who is the guy that is in your life that did not give you any understanding on why you should or shouldn't make this purchase? Because first thing that people are doing is they are making decisions, informed decisions, and still signing on the dotted line and saying, yep, I still want to have this mortgage. But then they go online and complain about the fact that they are spending $4,300 at the time, $4,300 a month for a house.
At some point, we're going to need to, as a culture, understand more about why we have such a deep spending habit. We don't really understand why we need to have the most materialistic things. I, for one, probably can guess why we do. And I think the reason why is because in America, everything is highly commercialized. When you turn on the television, what do you see? You see fast food ads. You see clothing ads. You see mortgage rate refinancing ads. So when you see these things constantly, roughly every 3 to 5 minutes on the TV between commercial breaks, you're just getting bombarded with advertisements. We develop a psyche and a mentality that whenever we have money, we have to burn it, and essentially. The American dream has always been centered around owning a home, home ownership. As of late, the American dream has become the American nightmare. A lot of people have signed mortgages, bought new homes, and turn around a year or two later and they cannot afford their payments anymore, especially when it's time to reconsider refinancing down the line, or when you get a random surprise rate increase or a payment increase. So it's kind of sad to see what's happened to these people, because they're in a rut. Essentially, they cannot reposition themselves very easily to deal with the additional burden that they've incurred. And to be honest with you, I think that no one should be buying a home unless you are 100% financially secure. And if you can do so without leveraging a huge amount of debt. Now, when we hear the Robert Kiyosaki's and the Ray Dalios talk about using debt to purchase real estate, oftentimes they're referring more to using debt to buy commercial real estate in which you can, build income, from which you can get income. And oftentimes people misconstrue that by thinking, well, I can use this debt here to just buy a house for me to live in and for me to ball out on. No, that's not what they were talking about. Yes, there is an element of you using the debt to purchase a home for you to live in if you're going to do house flipping. If you'll live in your own dwelling and then at some point give up your dwelling to someone else to live in, long term, mid-term, or short term. But in many cases, they were buying real estate with debt, for which they can build apartments or they can rent out space to commercial enterprises. So in that sense, people misconstrue exactly what it means to use debt responsibly. And I think what's happening right now is that people are waking up, receiving these big bills, and they're getting very nervous because they don't understand or know a way to pay them off. And the problem is, once you incur so much debt, it just spirals and snowballs into something a lot larger down the line. And then it's really hard to play catch up once things get out of control and unravel. So the only thing I would say in this case is you have to understand the reality. Check the reality. The reality is you should not be purchasing a home at all unless you understand the financial risk and the potential drawbacks of leveraging debt and using it for home purchases. Instead, you should live in an apartment as much as it kills our ego to do so. We should be living in apartments because, guys, let me just be 100% honest with you about something. This whole I need to buy a house, I need to live, good. I need to have the garden. I need to have this and have that. Trust me, once upon a time, I also had that same mindset. But since living in Europe and seeing that most of the population in Europe are not homeowners, whereas in America, a lot of the population up to a certain point were homeowners. I think the majority were. It's two different ball games there. In Europe, if you buy a home in Europe, people literally think you are a millionaire or you have a lot of money, because the average home here starts at 800,000. Okay, now today, I mean, you can find some homes that start at 500,000-600,000 in Germany, for example. But you're going to usually, for that price, have a very old home that needs a lot of renovation, may have some spider infestations and so on. So you're going to have to put quite a bit of work into that house to prep it, to make it livable. But back in the days, you spent 500,000, 600,000 on an American home. It's going to be a pretty good home. Probably even today, in some states, you can still spend that amount and get a very good home. But yeah, in Europe, the mindset is not to buy a home. It's something nice to have, but the mindset here is to live well in your apartment and to live along your means. Stay frugal, save the money, possibly invest it. It's just a different mentality. Hence why a lot of people in Europe, there are some people who struggle, but overall financially, they're good. They are good compared to us. Right now, we are in a shambles, guys. We are in a shambles and we don't even understand how we got here. But just take a look at these videos. This completely shows you how we got here. Misuse of funds, of debt, the false interpretation that we need to buy a house right now to live good and survive. In some cases, some people were completely innocent. They didn't know that they would fall into this pit. And then all of a sudden their mortgage payments went up. But let me be clear when I say this. I think that when you buy a home at the very beginning, you should assess and factor all of these potential risks in before you lay down and give up all your money. These people should have known that. And again, I don't want to attack them so much. Again, they're completely innocent. They possibly didn't factor these things in. Maybe they did, and it just crept up on them. And since they were already in a contract, they couldn't pull themselves out. I understand that. I'm saying this so hard stance right now to let you guys know, if you're thinking about buying a house, especially if you're young and you don't have any cash reserves, you don't have a nest egg in your bank accounts yet, refrain from doing so because it can kill you financially, for lack of a better term. Okay? And one other thing I'll say is this: don't feel ashamed of renting an apartment. I remember, and I'll leave you guys with this. I remember how in America, oftentimes girls would laugh at men who didn't own their own home or didn't rent their own apartments or didn't have a car. Usually wouldn't even date you back then. And then at some point, men started getting their own cars and renting their own apartments, and then women became even pickier at some point. Not all women, but quite a few, and they expected a man to have his own house. And so men aimed to get their own homes, and then eventually these girls became wives, and then they moved in and they lived together. And the house was usually under the guy's name, or they would sell that house and then they would move in together into a brand new home. And that was just the way of American culture. The woman always wanted you to have something of your own because oftentimes in America, women also have their own assets, especially if they're going to work and so on. What ended up happening through the midst of all of that is that a lot of women usually would force men into a position where they felt like in order to be the baller in the room, I needed to have a house or I needed to have a car or an apartment. And I think, again, this plays directly into the mindset of America where we need to have hard assets to show our wealth, to show our well-being, instead of just saying, let me play it safe. Let me be a little frugal. Let me get something that's nice enough, but I don't need to buy a house. I can just rent an apartment. And it's quite funny now when we look at Gen Z and then the upcoming Gen Alpha and so on, how they are doing the exact opposite of what the boomers did and the generation after that and the generation after that. They're doing the exact opposite, starting from the millennials all the way up. They're saying, you know what? I don't need a house. It would be nice to have one, but I don't need it. What I need is to have my own apartment here. Or you know what? I don't even want to have an apartment. I'll just become a digital nomad and I'll travel the country or the world and I'll live from Airbnb to Airbnb. And when they do that, yes, they're still paying housing costs, oftentimes temporary housing costs, but they're not locked into a 20 to 30-year contract. And then they're not also faced with the risk of their rates going up. So they're usually quite safe. I must commend the younger generation. Yes, they're going to be screwed with jobs and potentially Social Security payments. And I say that not to be mean, but this the fact, it's the reality. But they're also quite smarter with their money. It's almost like the boomers were very smart, and then the generations between the boomers and the millennials were quite dumb. We were quite dumb with our money. I'm one of those. I was at one point in my 20s not the smartest guy in the room when it came to spending. And since then, I've corrected myself and I'm living a pretty good life, even though we are going through these tough economic times. And now you're seeing all of these Gen Zers, these millennials who have invested money into the stock market through these apps, and they're building wealth, and they're doing it without owning homes. Because once upon a time, owning a home in America meant wealth. Now, Americans are foregoing having a mortgage and falling into potential debt, the younger generation that is, and they're looking at alternative ways to build wealth. So, man, these people right now, they're going through a lot, and I wish them all the best, as well as other people who are going through the same things right now. I really hope that they're able to rectify their financial issues. But yeah, just stay safe out there, guys. Stay safe with your money. Try to invest it, try to flip it, try to get more out of it. Avoid these long term contracts of 10, 15, 20 years. And to that point, also, I also heard that they're thinking about creating a 40-year mortgage, which is insane. Don't sign that, guys. Please don't sign that. Don't do it. You'll throw your whole life away. Imagine being 20 years old, signing a 40-year mortgage, and you're done paying it off by the time you're 60. That is financial jail. Guys, like this video if you love my content here at RCR. I'll be bringing the heat every single day for you. Subscribe to me, this channel right here. Show me some love. And YouTube thinks that you'll like this video right here. Go ahead and give that one a click. And I'll see you on the next one.